The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. This is the Tiger Technicians Hour. My pleasure to be here Monday through Friday. Actually, I won't be here this Friday. That's tomorrow and I'll be away. But in the meantime, we'll be looking at this market very, very closely. Why? Because we have extended to higher highs, and that is really important. So thank you, Steve, for 2 great hours. Of course, we've got great shows coming up all the way through the day. You got Larry, you got Daryl, you got Dave, you've got Andy, you got Tom. I mean, just the works right through until 6, and then they get repeated. Let's go through the numbers. The E-minis right now up 7 at 1879.50, all-time highs. This is leg D, possibly PD in the 120-minute chart coming up soon. But in the meantime, back of the ranch, leg D, the daily. Cannot complain about that. Well, we don't know yet. This is called F for now in the weekly chart. And let's run all the different numbers. You've got the Dow. Let me do that with live charts, INDU. The Dow right now is at 16,438, up 77. Slightly better percentage than the S&P 500. I was a little suspicious of that. And I've got this as leg F. Now, there is just a chance that this is a recycle, and this isn't F. It's actually a brand new leg B in the Chapman wave. I don't want to make things complicated. All I'm saying right now is that there are parameters to watch. I said if the Dow gets to the 16,000, 420 to 16,450 area to my subscribers on my opening call, then what we will have is something that's really interesting because it extends. You can see there's a little dashed line here. Let me open this up so that you can do. I want to take, since I won't be here tomorrow, let me take a moment to be a little more thorough. And we've got callers online, but I want to do this. From this trend line resistance, this dashed line, we're right there at resistance at this particular point. Why would I be able to call this an alternate wave count? Because within 3 bars, it actually was within 2 bars, you went from a peak D. Now, just real quickly, the Chapman wave buy signal to buy mode is where you've got the Dow, or in this case the Dow, going to a low on the 5th of February at 15,340. And it runs up, and all you do is count each successively higher peak. And as long as the technicals are in place and it's moving above the 9-period moving average, it should, in fact, go to a peak A, capital A, peak B, peak C, and even a peak D. At that point, you've got to be a little bit careful. And what we had is that Monday smashed to the downside with a Chapman wave Roman candle closing above the very next day. The Roman candle is a very positive aspect, and it also says that straight to the new high within 3 bars gives you the technique that I called the Chapman wave instant restart. There is another technique that I use, which I'll be explaining to my subscribers if I'm able to do anything for tomorrow, but certainly by Monday we'll be looking at it. And that is what happens when the price continues to go higher, and at the same time, while going higher, you've got the technicals correspondingly higher. We'll talk about that and what it can imply. But in the meantime, that F that we've gone to now, the leg F in a retracement from the 16,588 high of December the 31st down to that February low, this retracement is doing very nice. It's very steady. It's not fantastic. It is just steady. Now, it tells me that I've got to look at a number of other sources before, that is another technical tools that are going to give me the heads up to say, hey, this is going to be a recycle. But at this particular point, there's nothing to do because ACD is strong, stochastic is strong. So that is leg F at this particular point in the daily. Leg A, gray A in the weekly, but the moment if it breaks above 15,588, I'd go E/A. If this continues, the weekly continues higher. Now, this is even more important, is that the monthly chart is right in that repellent zone, right there, that whole area between, now it's between 16,790 and the support, which is at the low of 16,071. It's a wide swath. But in fact, look, those are that's a resistance area. It's been a resistance area for a long time. So today's action, I would say, would be very, very positive, except there are a couple of aspects that I've been talking about saying to me, you've got to be a little bit careful here, very selective. We have long positions, we have short positions. Thank goodness both of them seem to be working, or majority seem to be working, and that is good. Now let's just go to the S&P. SPX right now, so the Dow is up 81 at 16,442. The S&P has continued this leg D to the upside with the MACD strong, stochastic at 89%. That's good. And the alternative wave count in the weekly is G/A. And I have to tell you, this is very, very interesting. Let's do one thing at a time. There is nothing technically at this particular point. You had a little doji candle. A doji can turn into a halfway marker. And if that is going to be a halfway marker, then you've got a potential to move in the S&P all the way to the 1889 to the 1905-ish area. But I like to go one step at a time. And we're going to get to the aspects that say, be a little careful here because it is very selective. And that is in the QQQ, 1, 2, 3, the QQQ series, and that is the NASDAQ 100 trading vehicle. It's had very small moves to the upside. And yes, it has gone to higher high, but it's really struggling. And the MACD is just starting to show a little bit of a sign here that says this rally, the last move from that spike on Tuesday, on the low of 88.87 on the low on Monday, says that the stochastic's at 86%, but there is a chance that it could turn around here, and the weekly chart is in leg D and bumping right into resistance, and same thing with the monthly chart in leg E. Nothing technically wrong in the monthly chart at all. The weekly is saying, nice bounce. I want to see how you close on Friday, and the daily is saying, be a little careful here because there are signs that are saying there's some internal weakness in the Qs. Nothing wrong at this particular point, but the signs are there. But now let's just run over to gold. Gold's up 5 at 13.45. So now this is very interesting in the June contract. I believe that's June. Is that June? Yeah, the June contract, you've made a peak E, you walk in the 9-period expansion moving average, the 200-period moving average, and the 9-period are about to cross to the upside. I'm suggesting that gold is still within the trading area. Remember I said trading area between 1368-ish, something like that, and probably on the downside between 1320 and 1318. And leg B in the weekly chart, I think the GLD gives you a better picture. GLD, nice bounce from that peak D, gap up, gap down, trying to fill the gap. In the daily, there's that 9-period moving average at 128.59, and the 200-period moving average a tad lower, 128.43. And what we've got is that the GLD is at 129.69. That's the GLD is the Spider Trust gold. And you've got that pattern that I articulated and drawn a long time ago in the weekly chart. It says the H should go to an M pattern. And so this is still quite positive for gold. I don't see anything negative right at this particular time. Silver is up 10 cents at 21.37. Platinum is up again. Now, I've spoken about platinum yesterday. I said, that is quite, I hadn't actually looked at it for a couple of days. Next thing you know, platinum is soaring like a rocket ship in leg D and just about to become overbought. So I've got platinum now at 14.85. I'm suspecting that somewhere between 14.89 was the round number high that made on the 5th yesterday. I'm suspecting go a little higher, maybe 14.92, somewhere between 14.92 and yesterday's low, which corresponds to the 9-period moving average of 14.57, will be the consolidation starts. That I just want to jump to coffee for 1 second. Coffee was in leg D, and then it squeaked So that was 197.80, 197.60. That made D. Now E, and it's possibly making a peak E. And I'm suspecting that coffee is about to start the same thing. Coffee's going to trade between 205-ish, somewhere in the 205s, with 190 very important support. I would not be surprised if the pullback over the next 3 to 5, 7 sessions, maybe, if coffee takes out today's low of 193.05, this is the continuous contract. So let me give you what everybody's looking at. Oh, I don't think I've finished it. This is the June. Oh, I haven't done. It isn't June. KCK, I'll just try K for a little. Yep, there we are. If the May contract for coffee takes out 204.10 on the high side, I can see it going to the 204.90, maybe 205.30, and I would not be surprised if it consolidates between 185 and 183 over the next 3 to 5 or 7 sessions. Fabulous move, just needs time to digest the gains. The dollar, I wanted to say the EUR, when I last looked at it, was on its way to leg D. It is in leg D. Now look what we've got. We've got all the indices in D, E, or maybe even an F. So that says you've got to be a little bit careful in the Chapman wave. It can recycle, but this is the moment where you start to be a little bit cautious. You can take some cautionary steps just as a way of looking at this and saying, to be judicious with a move like this. I did feel this morning that there was just too much exuberance. So with that, I'm just about to go to our first caller. We've got Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you doing?
Very well, thank you.
Excellent. Yeah, the IBB. Hopefully this round will get the sledgehammer out and knock it down silly.
I don't mind sledgehammers. I would prefer right now just to have a little bit of a what can we call it? A little mini hammer that just goes knock 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 to stop it from going higher. And so far that seems to be the case.
Working.
Now,
right?
Do you have a position here?
I do, and I'm just wondering if you have a target that we're looking for. And that actually, okay. And then a quick follow-up to that. I know it's not a quick answer, but is there one or two indicators that you're looking for as far as a recycle?
In the general market?
Correct.
Yeah, I can go through those. So let's go through a couple of things. So Ben is looking at the iShares, the NASDAQ Biotechnology ETF. And in this particular case, it's something that my subscribers and we've been focusing on for a long time, months. Most of the time, we've been very successful at picking each particular top at a D or whatever it is, and it's pulled back very sharply. We've had nice positions for that. And then, out of the blue, within minutes, it spiraled to the upside. So we gave up gains, and in some cases, we took a small loss in the 200% short. So I'm going to do this. We've got a break coming up, and I'm going to do a little analysis of the IBB when we get back. We've got Ben online, and the Dow is up 78, S&P's up 6.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. I had a request in the den to look at Joy Global. We'll get back to that. But right now, at this particular point, we've got Ben Tallahassee, and we're looking at the IBB. So the IBB right now is trading at 267.87, down 42 cents. It's at a terrible time since its peak D. In fact, now I can put that down arrow in because it's already closed under the 9-period moving average once. What happens with the IBB is that as long as it's over the 9-period exponential moving average, it seems to have buying power. The moment it starts to close decisively for a few days in a row under the 9 EMA, most of the time, it's going to have a fairly deep retracement. That is from the last peak. But a lot of the time, it only does it for a little bit, and then it spirals to the upside. So what I'm saying is that in this particular index or in this particular ETF, the day is young. Anything can happen. And I'm looking at it and I'm saying, let's take a look at Celgene. That's number one on the list. Celgene is having a tough time, made a peak, a possible peak G in the monthly, but it's a peak E in the weekly. The technicals are failing. It's trying to rally. It's got a lot of resistance. It's got, it had a spike this morning, and it's giving some of that back. If Celgene is able to break above 167.26, it's at 163.15 now, down 9 cents. The general market is much higher. So this is starting to show what I've been talking about for a little while, that there's going to be selective, this rotational, if there's a rotational correction, then what we're looking at is there's a possibility that some former really big winners are going to become not necessarily big losers, we don't know yet, but they are going to digest very recent gains. So Celgene's one. If Celgene takes out 160, closes under 160, it won't take long for it to retest the 158.63 low of the third. If it takes that out, the week is saying, uh-oh, there's that H pattern, lowercase h, be careful. So that's number one. Number two is Gilead. Gilead is, that's a very unusual thing. It's making a peak D if there's no new high. Gilead Sciences is trading at 82.50. It's down 37 cents. If it can't get above 84.88 in the next 2 weeks, I've got this as an alternate count G/C in the weekly chart. Now, I would have made a bolder statement about Gilead Sciences because it really has been struggling in a tight range for a while, but it hasn't given any sell signal in the weekly. But the daily definitely has said it went to a new recovery high. This is probably going to have to be called a G because the last one was an F and F/B, and this is like an inside buy. So this is saying unless Gilead Sciences can break above, it's at 82.47, break above 84.88, you normally would do in a split second. 2 points are nothing for it. It's having a tough time. There's a good chance it's going to break under 81 round number low of 3rd of March. So as I go through them, I'll do two more. Amgen, which is really just one of the old line companies, but a fantastic company. It is in leg D right now making a doji. I couldn't tell you how many stocks are in leg D or E with doji or candles that are just, they're really straining to go much higher. So I'm looking at Amgen and I'm looking at BIB, which is a biotech, Biogen IDEC, biopharma, and it made a peak C1, C2. This is just classic in the work. In the next Master Trader series that I do, I'm going to spend quite a bit of time on this, especially if it works with BIB, which has just been a monster stock on the upside. It's trading, it's 347.28. It's up 8.28. Now it's giving back huge gains. It was up at around number 353. Second time, it went to 353, round number high. So I'm watching these really closely, and all I went typed in the wrong place. All I'm saying is that I think you can prepare some things like we have done. You can just make stops, etc., very tight. Now the price has to tell. I've done my homework. It seems to be responding a little closer to my plan of action. But let me tell you something. I don't have to tell you. You know how quickly these things can fire back and thumb their noses at you. You've got Regeneron Pharmaceuticals, one of the other monsters here at 348.49. It's up 3, but you know what? It went to 352.50 this morning in a possible leg F. I suspect that if the IBB starts to break in the next 2 sessions, now Friday we've got the job numbers and all that, if there's a big down move, a sharp double-digit down or triple-digit down instead of up, I think the IBB will break 265 to 263 support. That's the way I'm looking at it. If in fact it breaks above 75, I have to say, whoa, be careful. I hope that helps you. And I will talk over the period of the session. I will talk about the things I'd be looking for a big turnaround of the market. So much for calling, Ben.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back, and just from the den, Jay and Jay wanted to know about Joe Global, JOY, trading at 57.80 up 2. Looks to me like this is a news-related up spike. It was at a peak D. This makes it a leg E. But really what's happening is if it's able to hold, what I said is, if JOY is able to hold the 50, climb to the 59s and then hold 58.20s, that's key support. That would be very important. The close today is going to be really key, because if it gives back most of the gains, that's not good. But if it holds towards the 58s, then the 60.55 is a 200 exponential moving average. That if in the month of March, at the end of March, it's able to close above, I think I'd said above, in the 62s. So that's about 5 points from here. That, for the monthly chart, that'll be the first really good sign of strength. So those are the parameters. You just don't want to see this give back gains, and by Tuesday it's trading under 54. It would be very poor action. Let's go to Bob in Rumson, New Jersey. Bob, how are you?
I'm fine, Basil. It's great to talk to my favorite technician.
Oh, thank you so much. That's me. Thank you.
That's you. I love your show. It's fantastic. Bed Bath and Beyond.
BBBY, right?
Yeah, if we don't take out, if the stock doesn't take out the high of yesterday, which is 68.86.
Right.
I think we'd have a peak D. So as long as my wife doesn't get down there today and spend some money, we'll probably have a peak D.
Yeah, but that wouldn't go up until tomorrow. So
very true. So what I'm interested in shorting this stock, and what I did was I bought the May 17th 65 put.
Okay, so what my actual recommendation is, I don't know if they have a 67.50, because 65 is implied. Well, this is March.
No,
yeah,
May.
May. Okay, great. If it's May, that's fine. Let me, folks. Let's just go through this. Bed Bath and Beyond. It's one of those stores you go into. Everything looks interesting, and then you'll end up only getting the specific thing that you wanted, and then they have these few little things that you never even dreamed of. I think I got one. I'm still using just a fantastic little thing. It is a motion detector. So like when I have my grandchildren staying here, what we do is I put the motion detector in the passage, so if they wake up in the middle of the night, pop, the light goes on and they're fine. So little things like that. But they had, I think, a very poor earnings. I think that's what it was, that very sharp move from a peak G in the monthly. This is very interesting because the weekly chart is really very ugly, and the balance took it to the 9-period moving average last week. Couldn't close above it, but it went above it. This week so far, it looks like it could even close above that level, which would be 68.04. Now, this is very interesting because in the daily chart, it went to a peak E right at on the 3rd of January at 80.82, and then within 4 days there was that bad news, but it must have been earnings or something, on the 9th of January. It had closed, had a round number low of 79 the day before, closed at 79.68, and then plop. It comes all the way down. There's a high of 72.60. That is a huge gap to fill. So what I'm looking at is the stochastic 90%. That's good. The MACD is up, doing well, and it mirrors the price. And this is what I would say to you. Because you've got May, you can have a little bit of patience here. There's a chance that it can have one more. If I have to tell you that if BBBY, trading at 68.35, down 42 cents, if it's able to get to 69.58, somewhere around 69.50 to 69.70, all of a sudden, the 200-period moving average can become a magnet at 71.03. So the way I'm looking at it now, any rally can pop above yesterday's high of 68.86. But it better give it back real quickly, because what you want to see is, today is Thursday. By Tuesday afternoon or Wednesday afternoon of next week, you really want to see it trading and bumping its head against the 9-period moving average, which is support. You want it to come at 67.64 resistance. Not only that, it's going to take either a 2.5, maybe even a 3-point move down to get the fast-moving average of the MACD lower, to even test the red line, the slow-moving average. And the stochastic at 90%, we'll have to see a 2 or 3-point drop to start getting to the 83% area. So I think, time-wise, thank goodness you went out further. My preference would have been to go for the 67.50, but you went for the 65. That's okay. It's really important that over the coming, what can I say, by midweek next week, you want to see it start to be, you want it below 67.50, treating that 9-period moving average as resistance. And then what I would say to you is the weekly chart, which is very weak, WEAK, that will be your signal to say this could be a single leg A up failure pattern, because you want to, within 10 sessions, you want to definitely be trading in the 66s.
All these retailers seem to be having difficulty.
They are having difficulty, and yet, if you look at the RTH index, that rebound, I didn't expect it to have such a rebound from the RTH, is the market vectors retail ETF, and it made an all-time high of 61.36 just back in November of last year, and then in February, the week of the 7th, it went to 55. That's 6 points. That's a 10% correction, which it hardly ever has. So the rebound is very strong. Something about this rebound is telling me it's more emotional than technical. Weekly charts.
I think it was helped by Macy's. Macy's had a very good report, and the stocks at a bit all-time highs still.
Macy's has been absolute the stalwart. It has been, I've got an impossible leg F. I must tell you, the more I look at these charts, the more I'm saying to myself, yep, a mega move, a mega bull market has been unfolding. There are so many facets to it, so many very interesting things that some of us who have been the business for a very long time have not seen quite like this. But a lot of it is said there's a lot of strain. Even Macy's could go to one more high to make peak D, about 58.66, and then I'd say be real careful. But in the meantime, it's been the leader. It's still the leader. It's trying its best to get to another all-time high. I think you've hit the right thing.
Did you see Staples today?
You know, I was going to talk about Staples yesterday. I didn't know it would do this. I was going to, in fact, a week ago, I had it on my list almost every day. And what I wanted to say is that from the email that I'm getting and from a whole bunch of things, I'm not looking at the price of Staples. Thank God I decided to separate them in my mind. On the one hand, I think Staples is for the very first time in years, I'm seeing Staples give an all-out effort. I was there last week. They had this bag, you know, like one of those bags that you can put things in, a carry bag, and whatever you could put in it, you could get 20% discount. I mean, they are doing an incredible amount. I think it's going to pay off later, but price-wise, there are other aspects that you can't go into when you don't know the books. And I bet if you go into the books, what they're doing now is not quite working yet. I think it will be working if you compare it to JCPenney, which I've spoken about for some time now. I've been saying I think that JCPenney, when you if you're looking at the Oscars, those JCPenney ads were superior. They were really good. I think there's a big difference between a turnaround like JCPenney is trying to attempt, and I have to call it an attempt. We have no idea if it's going to work. I hope it works because they're going all out doing, I think, the right thing in the advertising. Even the stores are a little bit better. Staples is still, the stores are not. They do most of their stuff online. Tough market, that online. I think that's what's showing up. But I think they are working very hard. You brought up a little point there, huh? Staples.
Thank you very much for your time. I appreciate it.
And thank you. I think you will be right, but it's going to take a little bit of a bounce first before it starts to come down. So we're looking at that together. So, folks, let's do this. We've got. Thank you for calling. I always appreciate it. Folks, the Dow's up 78. The S&P's up 672. Now, I was asked, what would I be looking at as signs that would say this rally is going to fail? Well, three things that are very important. I always go to the VIX. Most important aspect is the volatility index. That, to me, is buying pressure and selling pressure. Now, if you look at the VIX, at this particular point, there was a total island reversal. One of the most spectacular island reversals in the volatility index that we do have them, but not one like this that we've had for quite a while. So on Monday, it spirals up to 1678, gaps up, and the very next day, it gaps down. And what's happening now is the 9-period moving average of 14.29. That's going to be key. Now, I'm going to talk about this. I said three things. One is the volatility index remaining in the 14s or lower. That's just buying pressure. That says, the market could pull back, but it's really just a pullback. It isn't a major sell. If the volatility at any point in the next 3 to 5 sessions, 3 to 5 takes me into Tuesday. 3 to 5 sessions starts to get into, it just has to touch the bottom of the candle of the third, 1538. That shouldn't be hard to do if there's going to be turnaround. But you've got to see bad news. Without the bad news, the market can only have pullbacks. With bad news and the volatility index climbing, it says selling pressure, it says market nervousness, it says the barometer that is your gauge is giving you the clues. That's what I'd be looking at. So to make it as simple as possible, just using the volatility index in the 14s or lower, buying pressure, the market will sustain the upward trajectory. The moment it starts to break above 1430, that's the 9-period moving average, close above that, it says, okay, be a little careful now, because if it continues and moves up even a point higher, that selling pressure will continue. if the selling pressure is going to be sustained, and that says, yes, we finally got a peak F in the Dow. Oh, there's another thing I can talk about right now. Let me go to the Dow chart. I'll use this because I won't be here tomorrow. I'll use this as an example. That is for Friday. So this is Thursday, the 6th of March. And so I'm talking about it right now. The Dow's up 71, S&P's up 6. The Dow is up over 0.40%. The S&P's only up 0.33. 500 stocks are not participating as well as the 30. So you've got to be a little bit careful. So let me do this. So you've got the VIX with bad news. That's one. It's actually a two-part, part A, part B, but you've got to have both parts to get selling pressure. On the market itself, if the Dow at any point, first of all, if it takes out yesterday's low of 16,360, that's 70 points low. If it takes that out, immediately the trajectory would be to the downside of 16,284 because that's the 9-period exponential moving average. I would say that for a sell signal in the Dow, I probably won't get the sell signal until the Dow closes below 16,280 and the MACD starts to turn down quite sharply, but the stochastic at 85%, if that happens, if it does pull back, you'll see that stochastic at 79%. I can put a down arrow and say, whew, another, just like peak F at 16,588, December the 31st, confirmed the following day. This would be a peak F. Now, on the other side, what if there's a pullback tomorrow? But it's just a mild pullback. Dow's down 47 points, S&P's down 5.5. And then out of the blue Monday, there's a spiral to the upside. Is that a G? I would have to say no. I would immediately say, forget the G/C. It's probably leg C, and we're going to recycle to entirely new buy signal to buy mode in the Dow. That's the only way I think that I'm going to be able to look at it, because I don't see how the MACD would turn negative, and I don't see how the stochastic will give back anything more than 2%, still staying above 80%. So I thought that that would be the second thing. The third thing is you want to see stocks like the fantastic stocks like a BIIB, a Biogen IDEC, BIIB. You want to see that not moving higher to a new all-time high, but taking the 353 round number high that it's made for the second time. So it's peak C1 at 30. Whoops, so what happened here? 35.47. Peak C2 at 353.00, round number high on the 26th, pulls back under the 9 EMA, pops back up, and today's high of 353. Take out the 353 by going to 357, not just 353.90, but a close above 356, somewhere around there. And I have to say, a recycle going on. Watch out, these biotechs. They are the absolute proof of the ever-ready bunny. And you want to see if Amgen is able to not just stall over here and drop to the 124s from the 126s, but get above 128.90 to 129.70, something like that. And then I'd have to say, you know what? Recycling high, you don't want to fight this. This is a mega bull move. And when you're trying to look for the downside, you've got to do it with very tight stops or buy stops. That's the way to do it. I'll be right back. Basil Chapman, Tiger Technicians Hour, and we'll be back straight after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. I had a question about a Fannie Mae FNM, and when I was looking at it just the other day, Fannie Mae. Yeah. When I looked at it the other day, it was in leg C, and I said there should be a leg D if it's based on the Chapman Wave methodology. Today, we've got that leg D at 5.2700. The MACD is very strong. Stochastics at 87%. It's very good. I do have a couple of signs that say 530, somewhere in the 530 should be resistance. Would not be surprised if over the next 3 to 5 sessions you see it trading between the 530s and retesting the 470s to the 450s. That's kind of the sideways consolidation I'd be looking for. The previous all-time high, or previous high was in 5.440. So that's there. It might even just make its way close to that, but then I think it's got a timeout. If it goes above that, I'm going to call it either leg D or a continuation of C. Either way, it's going to be very positive in the monthly chart, but it's very close to a consolidation. Next thing I had was CMG. I like that you brought both of these up. One is one area, the other is completely a different area. Chipotle, Mexican Grill, trading at 592 up 11. in leg E in the daily, unless it's recycled. I'm calling it E for now. And in the weekly, I'm going to call it C. That would imply that it's still going high, even if it has quite a bit of a pullback. And the monthly chart is in leg G/C. So this is going to be very, FG. No, it's in leg C. So the whole thing for Chipotle, as much as I dislike saying it, it looks like it's going higher. The next thing in the den is a good one because I've been looking at this for ages. Haven't got it. Lock is LifeLock Inc. Internet Security Backup. It's been consolidating after making an all-time high in leg C in the monthly at 22.85. Trading at 22.22. Yeah, it's nice action right now. I'd be a little nervous getting too aggressive with it, but if you're in it, make sure that if it goes above 20.45, you raise your stop on a portion. One of the reasons being that the weekly chart is suggesting that this rally could fail sometime soon and might have to do some more testing of the 19 to 18 area. Now, let me go through this. QQQ. QQQ right now, nice move almost at the highs. It's in leg D. What would allow it to go from the 91.28 area all the way into the 93s, let's say? What would happen is that the Dow does recycle higher, as I discussed it earlier. And the other thing that's really important is that if you're looking at the NYA, I haven't got time to do some of those others. NYA might have recycled, but I'm calling it F for now. But so far, there isn't that much in the technicals that say, be careful. But on the 120-minute chart and all of these, I'll be watching this real closely to see what happens tomorrow going into tomorrow's close. So that's the way I wanted to look at it. Remember the VIX. I made a big deal about the VIX. While we have time, I wanted to look at wheat just real quickly. See, wheat had a C1 peak, C1, C2, pulls back and breaks out. Is this D or a brand new A? I'll call it for D right now. I call it D for now. But in fact, in the weekly chart, 623, this is a continuous contract. It's in leg B. That is really, to get to a leg B like this in the weekly, that's very positive. First, really decent signs we've seen in some of these grains in, forever so long. And this is brand new A, B, C. Let me just put this in C. Leg D in the corn, continuous contract. I just want you to go through these because you can't, when you look at, what's it? DBA, yep, DBA, I think it is. DBA. This is the commodities. I haven't finished that. This is leg E, I believe it is. E, but it's extended very high. I mean, this is amazing for these commodities to do that. The DB, that was DBA. I want DBC. DBC is a different one. One has more grains and the other one has more of the metals. Also, very nice action, but this one's going to consolidate a little bit. This looks more like the gold chart, DBC. Okay, folks, Larry Pesavento will be here. I will not be here tomorrow. Maybe we'll have a replay of this session today. Have a wonderful weekend, and I will see you again on Monday. Thanks for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.